Good afternoon, everybody. How are you? Welcome to Take Stock Live. This is Sam Evans with you. It's Thursday, February 18th. We're here at the usual time on Facebook Live. It's just gone noon here on the East Coast. Glad you could join us. No matter where you are in the world, whether it's still morning or early evening, or maybe it's actually the next day. I hope you've been having a great day so far, and I hope you have an even better one to come as well. Man, there's a chill in the weather. It seems like the world is in an absolute funk right now. And we're here to hopefully shed a little bit of light on that and at least kind of thaw out a little bit with a good little bit of company, talking about the markets, some interesting subjects, having some guests, chatting through, seeing what we think is going up, seeing what we think is going down, and taking it from there. Man, I don't know about you, but I hope you're feeling a little bit warmer than us. Texas, I'm feeling it for you here. Start preparing for this. Is this the things to come? Are we seeing a completely new world unfolding out for us right now? Just everything seems to be changing. But hey, you know what? The show goes on nevertheless as well. Today, we're going to be talking on the subject of gambling versus trading. Trading, gambling, speculating. Are they one and the same thing? Or are they completely different things? A trader will always tell you trading and investing is all about speculation, but so will some gamblers. We really want to know the difference, and I thought, what a great person to bring on the show. But my good buddy, student momentum coach Brian Dumoresque, with his extensive Wall Street background, we're going to talk about that subject as well, because I think today, with the renewed interest in the market, and literally a recent report just came out that apparently 20% of Americans, and I'm talking obviously here from the US in our experience, 20% of Americans right now have been getting involved in some way in the markets. So, that's a bigger jump. Is it still a lot as many as it is? This probably the biggest it's been for a while? Absolutely. Have we had increased periods of activity and speculation? Yes. But a lot of this is fueled by obviously a lot of things in the media right now. Seeing the market bounce back so strongly in 2020, the whole GameStop, AMC, all of that stuff, and we're still talking about it because it's still relevant, and I think it's led to a lot of other things. So gambling versus trading is going to be our subject on the show today as well. The show is live and no complaints about the sound, so this is all good. Always listening to your feedback, and we had lots of great feedback via our Twitter, our YouTube channel, and here on Facebook Live. If at any point you want to reach out to me, we are live. I'm checking the questions as we come in. Good to see you guys in the room as well, and please just feel free to ask questions in real time. We will answer them, and maybe if you're looking at this in the recording, you can catch this here on Facebook Live, or you can go over to our YouTube channel to check out some more on that. On our subject as well, keep a check and subscribe to the YouTube StockAbility channel, where more and more mini lessons are appearing, content from our fantastic instructor team. Remember, Take Stock Live is brought to you by StockAbility.com, and we believe in obviously keeping the education out there and the information out there and helping people know what their money is doing and how to make the best of it. Anyway, with that said, let's comb on over to the market and see today what the main driving factors are. I tell you guys, it is a miserable day. Looking at the markets right now, looking at the major indexes, Dow is currently down 269 points on the day. NASDAQ down 191 points on the day. S&P 500 down 40 points, Russell down 40 points. We're having a pre-bound day, and remember, we had a great week in the market last week, a fantastic week in the market. And this feels like a little bit of a correction, a little bit of profit taking that we've been looking for. I'm still going to be looking at the charts, looking and seeing what they're going. But before we go over to those charts and take a little look at that, let's just see what's really driving the markets right now. Walmart had disappointing earnings today. Basically declined on its disappointing earnings. The stock futures fell as a result of this. It's a big player, Walmart. I don't care what anyone says on this one. Labour Department on Thursday morning reported 861,000 new filings for unemployment benefits, nearly 90,000 more than expected. Guys, whenever it comes to the jobs report, that is one report, unemployment or employment, whatever way you want to look at it, is definitely one of the things that I've always focused on and always said, even though when I make my investments, I like to look at price and price first. That's a big thing. And always looking at those figures, any signs that the economy is doing well, suffering, employment's a big thing. That is not good figures, I have to say on there. Like I said, Walmart missed its earnings. Did it beat the revenue goals, but and they're looking to boost their wages, which is good, but not enough to keep Wall Street happy. Right now, it's just 6 minutes after 12 here. At noon, 6 minutes ago, the GameStop hearing started with Robinhood, Citadel, and Reddit CEOs. Also, the trading star now, as he's coined, Roaring Kitty, is planning to defend his social media posts that helped spark all that crazy activity in the GameStop shares. Last time I checked, he apparently says, I still believe in the stock and I believe that this company has a huge future. Well, of course you're going to say that because you're probably behind getting everybody to buy the stock. What else is he going to say? Surprise, surprise. Be great to see what comes out of that as well, and how Wall Street and how the government handles that as well. Texas is all over the news right now. Power grid failures. How can they stop it happening again? If you are listening, Vince and your crew out there, Mike, Ranger Dog, all you guys who are out there, I hope you're doing well. I hope you're staying safe and healthy as well. I hope you get your power back soon as well. Try to keep warm. Give someone a hug. That's what I say as well. And on the final piece, another piece we've read report today is US life expectancy has dropped a year in this pandemic, which is the worst figure we've seen since the end of Second World War. Not good. This horrible thing is taking its toll, I hate to say. Good to see you on here, Dana Joyce. Great to have you. Not great news, I gotta say. Just looking at that, it doesn't exactly fill you with joy, does it, when you hear this kind of stuff? But it is what it is. Let's go on over to the charts and just see and take a look at the rundown of where we're at today as well. Zoom into some of these kind of things so we can all see where we are at. Zooming into the charts on here. Let's go over to here and zoom in so we can see on this. S&P 500, I'm going to scroll actually down to the bottom of the chart so you can see this. I'm tracking the futures here. So like I said, mini Dow Jones down a little bit more now. 280 points down on the day. 41 on the S&P 500. Russell in real time down 41.80 and 194.50. On the NQ. Not a great day. And everything, I mean, the indexes seem to be really absorbing a lot of this. Obviously, we're seeing that big hit in the Dow because of those disappointing Walmart figures. So we're seeing that. But on the day itself, you know, some of the FANG stocks, Google, not too bad, just $22 down on the day. Netflix down $9 on this. Microsoft $3 on here. Disney, one of my big watches, very bullish on Disney moving forward. $200 is the magic number for us on there. Down $3.36 with change on this day on here. Gold still now just broken back below the 1800 mark. And again, flat really pretty much for the day at 260. And crude oil finally breaking above that $60 mark that we've been talking about on this show for quite some time on here. But they pretty much flat for the day, just 9 cents down on the day. Not a whole lot. Where's Bitcoin right now? 52,000 on Bitcoin, still driving higher. It seems that Elon Musk putting $1.5 billion of Tesla's money into it did actually help it as well. I gotta say right now, I can't see anything that's really gonna stop that. Let's take a look and see at that before we do anything else. Going over to the charts, there it is again, just running, still up on the day on here as well. We can see this. I got this on a 4-hour chart that I'm going to just zoom into and take a look at this particular point. But here's the price action. There has just not been a pullback in sight. I say it now and I'll say it again. If we can get a little bit of a pullback coming down to here, I think a lot of those Bitcoin investors will be jumping on the bandwagon a little bit here. But a lot of gaps that make it really scary. But, you know, for me, I look at it and I got to feel that 25,000 seems to be the new benchmark for now on Bitcoin. I hate to say it, but this is one of those things I don't want to fight for now. But I will say this, any of you guys who are enjoying this ride, make sure you do lock in some of those profits. At the moment, with all this uncertainty in the world, I just can't see things really changing right now on that. Let's go quickly look at the broad market. I'm going to go over to the S&P right now, looking at the futures market on here. This is my favorite to track at the moment. We can see on here what a tremendous run on the daily charts. Let's zoom right in so we can see it on here and a little bit clearer. We've had a fantastic run on this, but some serious selling pressure coming in. I gotta say, I don't like this chart right now on the S&P. Looming below it, I see wide open space. I see areas straight across here. Let's just go back and use a different tool on that. This area across here around this 37.40 mark to 37.60 seems like the best buy point on here. If we're feeling a little more ambitious about the chart, I like it around the 38.20 as well. But this area for me is really where I'd be liking to get into it. This being a little bit more aggressive. But for me, it looks like it needs a little bit of a pullback. Nothing really, I think, here that's making me think we're in a bear market of any kind. This is just the market doing what it needs to. Heck, the market needed a little bit of profit taking. That's just the way it goes. You know, you're going to see a little bit more exaggerated price action if you go on over to maybe like, look at our friend the NASDAQ. Again, I'm looking at the NASDAQ futures here, feeling the push a little bit more on here. Let's just zoom in so we can see those charts. You know, again, this is a common part. And remember, markets never move in a straight line. We like to get what we call these pullbacks and stuff. And it looks to me just like a pullback. I will say it makes me uncomfortable when I look at this weekly chart and the move that we've had in this market, just like pushing higher on here. But again, on the day on here, again, it just needs a pullback. And there is a ton, I will say a ton of buying potential around 13,000. For me, 13,000 is the magic number on the NASDAQ as we speak right now. And that's pretty much where I think we'll be holding fast on here, which means we've got those gaps just a little bit lower on here that I think are going to be good points for that as a market. I like it a little bit lower, but I tell you this right now, this market, you're going to be aggressive on it when it comes back and buy those pullbacks. Again, these are not recommendations. These are just opinions. This is for entertainment and educational purposes only, but I wouldn't be surprised to see a little bit more downside before we take a pop on here as well. We need a good couple of down days. The tell for me at the moment is we are trading lower than the lows of last week, and that will help push this price down. Again, don't be surprised to see a little bit more downside on this market before we get a little pop to the backside. Are we calling the end of days? Absolutely not. I'm not crazy. I've been bullish on this market, it feels like, since forever. But hey, there you go. Have to stay bullish on this market while literally there's nowhere else to put your money, I guess. I mean, that's the way we kind of really look at it. So that's our quick little rundown on the market. That's where we are. Let's talk about today's guest as well, and our subject: gambling versus trading and speculation. Today I am joined by a friend of mine, good buddy of mine on the show, who's been here before. There he is in the, well, I wanted to say the warmer climes of North Carolina. Brian Dumoresque, how are you, my friend? And is it warmer, I guess?
How you doing, buddy?
I'm doing
good.
Very good.
I'm good, yeah.
Is it warmer? Down here. Is it a little bit warmer where you are?
It is 38 degrees, so it is slightly warmer. We've had freezing rain today.
Here. 25 degrees here.
All right. I'll take the 38, but I have no snow on the ground. I got some ice now. Today they have a state of emergency. Well, this county anyway, is under some type of emergency because of all the ice that's out there.
Wow.
But it's very rare this happens. I just think I brought the weather down with me.
Yeah.
So all my neighbors are going to want to shoot me soon, I guess.
You have a habit of taking it with you, Brian, wherever you go. Dear, how's life been treating you? So on a day like today, I mean, I say it feels like the world's on lockdown again, except now it's Mother Nature locking us down a different way. All right. First it was COVID. Great to see that COVID cases seem to be slowing down, but now it's weather. I mean, it's like Mother Nature's got a serious beef with the human race right now. Doesn't it feel like that? A great time to be locked in the house, or is it a good time to be locked in the house? Because idle fingers, right? Idle hands. Yeah. Make busy fingers, and busy fingers make bad trading decisions. If you're staring at the markets right now, looking at the price action I'm seeing, this is a recipe for disaster. And if you're just clicking buttons, this is gambling. What do you think with the charts the way they are right now, Brian? I mean, and let's look at some charts.
You know what? I can be honest with you. Right now with everybody home, the extra money, and then like with sports, we're always put on the back burner beginning part of last year. People opened up those accounts and started trading because it's another form of gambling to these people. The people that used to go to the casinos or Vegas or whatever, and they weren't able to do that. So this is a form of gambling as well if you are not careful or do not have some type of system to follow. All right, all these people you got to buy this. Okay, what do? They go and buy it. They have no idea how to look at technical analysis. They have no idea what they're doing. All they know how to do is buy something. Okay, what about, I can't really see what you have up there. But, you were talking about GameStop before. How would you like to be that poor person that paid $400 for a GameStop share?
Let's take a look at the chart there. I mean, it is, and it's getting worse, isn't it, Brian? So here we are with GameStop right now. I'll zoom in for you as we speak right now. Look, right now, as of today, trading at $43.33 right now, my friend. I mean, it ain't pretty, is it? I mean, it's really, really not.
I could be honest with you. Like, I never even look at it. Yeah. I'm not the greatest trader in the world, but I know a good trade from a bad trade, and I know what to stay away from. Mm-hmm. And with what my rules and my systems say, I look at it because I want to see what people are doing, but sure. I don't quote it. I don't draw lines on it. I just stay away. To me, that is a crapshoot. You got the hedge funds versus the retail people, and in the long run, the hedge funds are going to win. I mean, if you keep doing this over and over and over again.
Got Tilray on here. Similar story, Brian, on Tilray as well. Looking at the daily charts here on the right-hand side. After that pop that happened, everyone jumped in and just been nasty ever since, right? It's not getting that bounce back. A couple of weeks ago, we had Merlin Rothfeld on the show, longtime friend of mine and buddy. He was saying, how do people not think that potentially the big funds and these guys have people in the forums themselves just looking at what everyone's doing, so they've got more money, because they're always going to have more money. I don't care what anyone says,
Of course.
And let's say, I know Goldman's, JP's, all these guys, they're all in competition with one another. But if they chose to say, hey, everyone in those forums is buying up this, everyone's doing that, and they decide that they want to do the opposite, and they kind of form their own conglomerate. I think we know who's going to win, right, Brian? I mean, you've been there, you've seen it.
Yeah. I mean, I can be honest with you. Like most of this is just pure emotion, and when you put emotion in with trading, that's a recipe for a disaster.
So
You know,
these are all emotional trades. I looked at Tilray, right? We just looked at Tilray. We looked at AMC. Okay, we see how that worked out on here as well. You can see hopefully you can see the stock ticker, the symbol up on the right hand side here, Brian, where I'm showing you as well. And
Yeah,
for
yeah.
any viewers at home, we can see this as well. Nasty. I'm done with talking about GameStop, right? Because we just get it. Let's look at silver as well. I mean, tried to have, a little bit of action in silver as well. Look, we saw that big pop in silver just a couple of weeks ago. And now again, look, back down. People are like, oh, look at the move in silver. Like, really? Look at the move in silver. Let me draw your attention to this daily chart over here. And even look at this on a weekly time frame. And when you really look at it, it's like that move that we had there. We had way bigger moves than that before all of this anyone was talking about this. That's kind of normal in the commodities market, That kind of volatility to me, a futures trader is looking at and going, Now, sure, the GameStop is an interesting thing, but I feel that people are really pushing it, Brian, pushing it at the moment of this whole, like, I want to be the next guy. I want to be the next girl. I want to be the next person. And unfortunately in the news right now, Brian, all I'm seeing is now horror stories of people saying, hey, they borrowed against their house. They took their retirement accounts. They put that money and they're now desperately holding on to those positions, hoping they're going to come good. Brian, over the years, you've been involved in the market, like over 20 years or so now, and the things that you've done and so on.
Yeah.
Is this anything new, or did you see this back in the day as well? People just getting so attached and married to a position like this and just hoping.
Well,
the hope overtakes, right?
Yeah, you pretty much just took the words right out of my mouth, because what happens a lot of time when people get into, I'm taking a trade. Okay. The only problem is it goes against them. They don't know how to manage their trade. Then all of a sudden it turns into a buy and hold trade, because I know it's got to come back. But you know what, though? Now you're holding on to dead money, and there's no guarantee it's going to come back. I mean, look at a company like Enron, what's that, 10, 15 years ago? That was over $100 company, is now zero. If you were buying that, guess what? You have no money left from that particular trade. Okay, it happens all the time. That's why people are gambling. Oh, it's a buy and hold. I'm buying it now. I'm gonna sell it later in life. Well, how do you know it's gonna go up later in life? You have no idea. Look at GE. Could have bought it 20 years ago at $55. It's now like $11 or something. It's just dead money that you're holding on to. People think they know what they're talking about. They listen to the news way too much. Social media is dictating a lot of things to people, and people get caught up in it because they're afraid of missing out on the next big thing, the next big Amazon, Netflix, whatever it may be. And that's a problem, because people are gambling with that. They're taking money that they probably shouldn't be trading with, and they're throwing it at the market, thinking it's they're going to put it on black at the casino at the roulette table. You can't do that. You might be right once or twice, but the one time you're wrong, it could literally wipe you out and hurt you in more ways than you could even imagine, financially, mentally, everything. It could really, really hurt you, and that's why you got to be careful. You got to get rid of that gambling mentality. Look, I understand that trading is a form of gambling.
Sure.
But if you know what you're doing, you could identify these high quality trades, these high quality areas to enter, and more importantly, how to manage your risk. Like, people don't do this.
So much of it is about, I mean, I'm very candid, on the show, and I talk about things, and I was talking to my partner, Ryan Watkins, today, and, he and I both had a rough day today. We just got little bounce on the market, hit the first target, come back, did nothing, took another shot, didn't, tried to go with some momentum, got nothing. I have a loss limit. Just before I hit my loss limit today, I was like, I'm done. I don't even want to hit my loss limit. What's the point? I walked away. It annoys me. I ain't going to lie. Here I am on the show. It annoys me. I hate that when I'm like, walk away, and I'm like, ugh. But I also know that I can walk away from this with a tiny little scratch, and tomorrow it's gone and I can come back from it. What I can't come back from is a 20% hit, a 30% hit, a 40% hit. Just anybody listening to the show right now, if I lose 1% on my account, 2%, that's what I've got the limit at right now, 2%. If I lose 2% of the account in a day, I stop. That's it. I'm just like, done. And people are like, well, that's nothing. It's like, well, yeah, but you know what? Those little hits, you're going to get them. And like, the market don't want to play with me today. It does not want to do it. Doesn't want to know. Listening to that market is very, very key. And I will say this, Brian, and I'd love to get your perspective on it. For me, over the years, stopping has been one of the hardest things. I've put specific measures on my accounts now where I've got no choice. I have to stop. It locks me out. And you can do that, you know, you just can't do anything. And it's like, wow, you know, why do that? Because guess what? You know, emotions get the better of you. And how much of it does it come down to? I mean, because to me, the emotions are what make it gambling. Well, there's two things. Number one, you don't know what you're doing because ignorance is bliss until it isn't, right? And then there's obviously the emotions that make it gambling too as well. You know, how much do you find, you know, the emotions are what really create the gambling? Or is it that people just don't know what they're doing? Or is it a combination of both? What's your thoughts on that?
Emotion is a huge part of it. And what I've noticed, and I went through in the beginning part of my trading career as well, was you start to have you know, you think you know what the market's going to do.
Right.
All right. And you don't really have a plan. You don't think about the size of your account, how much you should be risking every day. This is part of your trade plan, your business plan.
Yeah.
Okay. You should also have store hours. You know, what hours am I going to trade? What type of trade am I going to take? You know, what kind of account size do I have? What asset class am I trading? There's so many little variables that go into this that people don't realize it. Oh, I got a $5,000 account. I'm going to go buy shares of a stock. Well, that's not really being efficient with your trading because there's rules that go with that. So now, getting back to the emotional part, I remember when I first started, okay, I would buy, you know, say 100 shares of something, and I didn't really have a loss limit, and I would buy something, take a loss. I'd buy the same thing again, take a loss. Buy something again, take a loss. Now my emotions, I'm squeezing the mouse tighter. Like everything now is falling apart and I could feel it, but I couldn't leave because I had that gambling urge going through me.
Yeah.
That's when I took a step back. I took a week off and I reassessed everything what I was doing. I said, you know what? I'm looking at my trading log, and one of my trading log columns had what was my emotional state? Okay. Was I sick? Was I hungover? Was I fighting with the wife? Whatever it might have been. All these impact you in some way or another. So now what I did was, okay, I have a trade limit, meaning I'm only allowed to take X amount of trades in a day.
Right. That's great.
As you do, I have a 2% loss limit as well. Now, in the past, I didn't because I'd be down, say, $100, but my loss limit was $100. I know I can make it back. I got a good feel for the market. I know it's going to turn. So what are you doing? Now you are compounding the problem because you are letting pure emotion run your decision making, and you're most likely going to be chasing something. It starts to go up. It comes out of a nice support zone, starts going up. You start chasing it. What happens? You bought it in a resistance area, and it goes right back down your face. Another loss. So then now that $100 loss turned into a $400 loss, and now you know what it did? It just ruined the rest of your day because you let emotion run your trading, and it completely wiped you out. So now instead of having a 2%, now I'm at an 8%, and now slowly I'm eating into my account size.
You know,
if I had a
and it takes its toll, doesn't it? And it takes its toll, and then you think you're waiting for it, and you're waiting for it. And I know, and I think the worst thing about it is when you think you know. I mean, like for the example, I think the scenario you're just talking about here, Brian, you know, is I've had these days where you know I'm trying to find an area, you know, the market comes down, and I'm buying it just around this point, you know, and it works a little bit, and it stops out. You're like, well, all right, I'll buy it again at the next point, right? And it comes back down and stops out again, and you keep doing it, and then you're like, well, hold on a minute, how much are you attached to this idea that it was going to bounce here, here, or here? You're attached to an idea when this market is just doing what? Heck, this is going down. But you get attached to that common idea. Whereas, you know, I think so many traders could do themselves a favor, you know, to stop that. Because now it is becoming a gamble. Like you're attached to an idea and the probability is not really on your side because the market wants to go one way, but you're convinced it's going to go its way back up. And it doesn't really happen in that respect. And it becomes incredibly challenging for people when that happens, doesn't it, Brian?
Yes. You know, when I first started too, I mean, I would sit in my basement. This is after I left the Florida Exchange, and I was in my basement by myself, and I had to basically relearn everything from a different angle. Okay, when I was on the floor, I had the order flow in front of me. I had other human beings that were either buying with me or selling against me, depending on what their customers wanted to do. So now when I'm sitting at home by myself and I'm trying to read a chart, it was completely different.
Right.
So I had to learn, you know, all over. And I made every mistake in the book. But until I took a step back and said, okay, what am I doing? I'm hurting myself here. And I said, you know what? not that I had an ego. I'm like, well, I know the market's going up today. I know the market's going up today, and I had CNBC on or Bloomberg or whatever news
Which is
cast it
typically the
was.
worst thing as well, isn't it? Because you've got more
Oh,
information blasted
I
at
gotta
you
tell you,
now.
after about I can't remember how long it was. I turned it off and I wound up putting like the Food Channel on, and I make my wife a nice dinner at night or something like that. Oh, it looks pretty good. I'll make that. But now it eliminated a lot of the white noise
Yeah.
because I noticed when CNBC is singing "Kumbaya" and everything's great in the world, you got to be weary. The
Yep.
top might be getting close, and then when doom and gloom sets in,
Yep.
that's when you got to start looking for these high quality support zones and stuff like that. So I would use the almost like a contra to what the media was saying. But now I don't even listen. I mean, I go through the news in the morning just to get some ideas of headlines and what news events might be coming out or economic news might be coming out. But that's the extent of it. The rest of the time, I have music playing in the background and I'm focused on my charts, finding my high quality zones that I play off of. Okay, and I live and die by these zones because that's part of my plan. That's part
Yeah.
of my system. And these are the things that I've learned over the years just to do.
Here's a question for you. And again, I love to be candid on this show. And anybody looking at the show right now, hey, Kel, Katie, Lisa, Philip, Clifford, great to have you on the show, listening with us and watching with us. But for me, sometimes, it doesn't get any easier taking a loss. People say, oh, over time it gets easier. This is an industry, a business where we're always trying to be right. And, that's kind of what we're conditioned to do in life is we're trying to be right. And I don't think it gets easier. I think you just have to learn with the acceptance of it. And I think, hitting your daily loss limit is one of the toughest things ever. But it's almost like what you think just doesn't matter. And, I think that's what separates, the gambler. The gamblers always want to tell you about their wins, but they never want to tell you about their losses.
That's gambling.
There's always going to be this thing, and I'd love to kind of just get your opinion on this point, and then it'd be great if we could move over to the chart and do a little bit of analysis together as well. And we're going to do it to what your call, my put. But yeah, I've got it over the years. I've been very reluctant when I meet new people to actually tell them that I'm active in the market, that that I trade and I invest. I let alone tell them, about my involvement in having my own company and all that kind of stuff, because there's an opinion about it, Brian, and a lot of people will go, oh, that's awesome. I want a piece of that. Teach me. And then they think that they can just, spend a couple of nights reading a few books about it and then they got it all cracked, which you can tell people to the blue in their face. And I say knowledge is one thing, developing the skill and the mindset's the other. And that's where you need help. The other reason why I don't tell people is then you get the other side of the coin. And the other side of the coin is where people go, oh, that's just gambling. That's just risky. Like I fell out with my uncle over this, very, very successful businessman. He's like, it's all gambling. It's all this. And I'm like, well, if it was all gambling, then why is the world still like, throwing mutual funds down people's throats and telling people to invest for their retirement if it's all a big gamble? There's a big difference. And somebody wants, my father, I'll say this, God rest his soul, my dad, he was as close to a professional gambler as I ever met. He had an interest in the greyhounds, Brian. I don't know if I ever told you this story. But he had an interest in the greyhounds, and he owned greyhounds and he raced them and he won big championships. And he was so interesting that every his kind of 30-year kind of gambling career, if we call it, he had a pile of money, like an account. And by the end of it, when he stopped gambling, that account was bigger than it was. And he never dipped in. And it was almost like a trading account for him. And as I got into this, my dad was so interested. And he said to me, what you're doing, I can't get my head around it. I said, really, Dad, what I do is no different to what you do. Like, you don't bet on every single dog. You don't go down the track and go, oh, one-legged Lucy. I like the name of that dog. She's 30-1 against, outsider, but I'll bet on it. Because you know what? I could put $1,000 on it and make 30 grand. Now, my dad would go there and go, who's the even favorite? Who's the favourite? Who's going to make a 2-1? Who's a 1-1? And he put his bet on that because he'd stacked the odds in his favour. So his average wins versus his risk weren't as good, but he had the odds stacked in his favour. I saw my father go 1 month without taking one bet because he didn't like the tracks, he didn't like the dog's health, he didn't like the conditions. He would wait until the odds were stacked in his favour. Is that really any different to what a trader does? Because to me, my father was a speculator, not a gambler. What do you think about that, Brian?
I agree 100% with that. Where, the people who have been around here for a while, they have a couple of things, okay?
Right.
Like you said, like, building up a case study type of thing, where I'm going to have a couple of things that have to line up for me in order to get into the trade, because I know that's going to give me the highest percentage of the trade working out for me in the highest quality area. Okay, so it's not just I'm going to take a dart and throw it at the Wall Street Journal. Whatever it lands on, I'm going to go and buy it.
Yeah.
Okay. That's not what we do. Okay. It's very calculated. We're going to slow it down. We're going to take it from a macro view and go all the way down to a micro view and figure out what is the best quality trade for us to take for us to be successful with with the smallest amount of risk, with the highest profit potential. That's what we're trying to do. Okay. Like today, I didn't take a trade this morning. I have a level marked off on the Russell 2000 that if it went down there, I was going to buy it. It never hit my level. So you know what? I'm okay with that. All right. But I didn't have that feeling that I had to take a trade to take a trade. Because if you're taking a trade to take a trade, what is that? That's gambling, that's emotional, and it's most likely a bad decision, which is going to turn into probably a loss. Now you feel like you have to make it back.
Yes.
I'm past that. I am past that. I don't need to do that. I am waiting for my setup and my setup only. And another one of my rules is I never use market orders except for on my stop loss. Okay.
Mm-hmm.
My entries are always I want to bid for it or I want to offer it out there if I'm going to look to short.
To get the best possible price. Yeah.
But not even that, because I notice if I hit the market order button right away, it gets my juices flowing. My emotions start to take off a little bit. So I eliminated that because most of the times if I want to buy something at say 10 cents, but realistically I want to buy it at the figure like $10 or something like that, I'd rather just bid the $10 and it comes to me. Now all of a sudden I'm getting a better price, number one. Number two, it actually hit me at the price I want to get into, and my stop loss is in the right spot. So if I hit the market order, I'm going to have more of risk on the plate, on the table, which I'm trying to eliminate. Any little thing that could spur an emotion that would lead to gambling, I am looking to eliminate. Okay. And one of the things to you, a little tip is don't use market orders. Just use a bid for it. And also getting back to, like the order flow thing that's going on now with GameStop and all these other companies, whatever. I used to use a platform probably 20 years ago that if I bid for something and I provided liquidity, I would actually get paid for that, a small percentage.
Okay.
Where a market order, you wouldn't get paid for it. So I'm like, okay, it's real small, but still, you know what? Extra money at the end of the month, it was pretty nice. I don't know if these companies do it anymore. I haven't really followed it that closely, but I thought that was actually a kind of cool thing because I think that's how they were trying to keep the liquidity in New York, NASDAQ, Amex, whatever markets where they were using, 15 years ago.
Nice. Well, I love the tip about the market orders as well. Don't be right. Think about when you're buying. Think about when you're selling. It does separate and having a plan. I think that somebody, a gambler with addiction, just that she goes from one thing to the next, trying to find that next home run. And I think if I was to share a tip with anybody looking at the show, getting interested and saying, hey, I want to kind of get those odds more in my favor, I'd say, don't try and trade and invest in everything. Have a watch list, a small watch list of one or two things. I'm as dull as dishwater. I literally pretty much trade the same thing every day. The Dow Jones, futures, and then I look at a set amount of currency pairs and a small watch list of stocks, and then just rinse and repeat, rinse and repeat, rinse and repeat. So if anybody's looking at the show, there's all steps. But I think to this, and one of the big things that, one of our mantras, at StockAbility, has definitely been, you got to treat this like a business. And too many people treat this like a hobby. And that's what I'm seeing right now. This ain't a hobby. This is serious. And I'll say it now and I'll say it again. One of the biggest problems is there's just no gateway to entry in this business. It's easy to open an account. Ever been easier. Heck, Robinhood, it's ticker tape all over the place. When you do your first trade, they're encouraging people. And, I think it's going to be interesting to see how the Congress hearing today goes. Interesting to see how it is because, there's a level of responsibility, I think, that people, and brokers need to take. And, also we need to take some personal responsibility in all of this as well. It's a very, very interesting landscape as well. But, if you're interested more about this subject as well, please go to the StockAbility.com website and check out. There are plenty of articles about this on there. We could talk about this as well. It's a great subject, Brian. And again, I don't think you ever get, some people are just never going to change. They're always going to say it's gambling. But I think one thing I'd say on it that I'd like to just get your opinion on before we look at some charts is, I think if you do something long enough to find out what works and find out what doesn't, you'll start to build up a track record, either a track record of loss, break even, or winning. And once you find that track record of wins and you stick that, now you've got a proven methodology. Because when people say it's gambling, it's like, well, Apple take a gamble every year. They invest billions of dollars in new phones that people are going to buy them. Disney takes a gamble every time it brings out a new service. Every film company takes a gamble when they release a new movie. right? Everything in life is a gamble, right? But what do? They stack the odds in their favor. They do their research first, and they think about where they're going to put their money and have a plan if it goes right or if it goes wrong. You know, does that sound any different to trading?
Look, you could look at any avenue in life of about gambling versus doing your due diligence. What's the difference between a guy who wants to open up a deli or a restaurant? Really doesn't know much about the restaurant business and says, you know what, I want to open up. Doesn't even do like check out the demographics.
Right.
Is there a lot of flow in this town? What kind of food? That type of thing. It doesn't really matter. And getting back to the emotional part for a second, I want to talk about real life emotion away from gambling, and I'm going through it right now, and it's me and my wife. We're at the point where we're butting heads a little bit because we sold our house in New Jersey. We said let's move down to North Carolina. We're renting right now for 6 months, give or take, because you know what? We just moved 500 miles away. We're going to reassess the area, find out what neighborhoods we like, what towns we like, what's important, what don't we like. So we're doing our due diligence. We're checking out the area. We're here not even a month, and she's already sending me houses that we should be buying because the market's exploding up here, and that the prices are going up. So she's totally aborting our plan, our strategy, or our system down here to make an emotional decision. So I'm like, Jen, slow it down.
Right.
Okay. If we're going to make an emotional decision, we're going to buy something that we don't like. We're going to buy it in an area that we don't really know too much about. Let's just slow it down. The right house will appear when it appears. But right now, let's just take it all in. I mean, it's a huge area down here, but it happens in every walk of life. That's my point. If you have a system that you said, you know what, this is what I'm going to do day in and day out, you'll be all right. But if you get in front of that computer and all of a sudden you don't follow your system, you're dead.
Absolutely.
You're dead.
Absolutely.
You're dead. Okay. It's going to be it's going to be death by 1,000 cuts.
There really are a lot of similarities, aren't there, between real life and trading and investing?
Everything.
It's all the
Everything. It's all the same.
Trading
you start
is
a new
life.
business.
The financial markets are life. That's how they are. It's that ultimate representation.
Hey, look, you start a business, it's going to be overhead expenses. You got to include some losses in there. You got to understand, what's going on. Part of your business plan in trading is taking those losses. Like you have, a loss limit. How many other people can say that? Not a lot of people actually do that. They actually say, I can make it back, and now they just ruin their account. Okay, you might make it back some days, I get it. But over time, if you keep doing that, it's a losing battle. It really is. You need to, look yourself in the mirror and figure out if you're serious about this. If you're thinking about doing this as a hobby, don't even waste your time. You're going to lose your money.
Absolutely. Great words of advice there, my friend. Absolutely great words of advice. We got a few more minutes left on the show. I'd love to kind of just go over to the charts, get your opinion on what's going, what's shaking, what's moving. And also, as you know, on our weekly feature, we do your call, my put as well. So I'd love to kind of just hear what you're bullish or bearish on. I got any idea what if you want to take the bull or you want to take the bearish play? Your call or my put? What do you want?
Well, honestly, right now, believe it or not, I'm looking at oil as a short at this $62 level.
Okay.
If you look at the weekly chart.
All right, let's go over to the charts and take a little look on here. So crude oil is on the case today.
Yeah, I mean it's trading right in that zone right now.
I personally have been so bullish on this thing in every Take Stock live show that we've done. Let's zoom in a little bit here so we can see it, because I'm probably pretty sure. But we got like a monthly chart up on here on the left of the viewers, the weekly chart, and then the daily on the right hand side. What chart do you want me to start with, Brian?
Weekly.
All right, so here we go. Let's go to this.
I was bullish on oil back when it was around $40. I think I said it on this show actually.
Yeah.
And now it's getting up into an area where I think we're going to find a little bit of resistance. It should pull back a little bit, maybe to around 52 or something like that. I don't remember the exact number off my head.
Definitely seeing this. This has been I got to say right now, my ambitious target on this thing has been $65. We're trading at, now, let's just zoom in so you can see it. We're trading at 60.77 right now, okay? Yeah. If people have been long on this taking profit, this ain't a bad place to take a profit. I mean, it's just one of those things. I just look at this and it's like after leg of the upside, it just needs the pullback, I feel. It's just like it needs the pullback. Does this long-term bearish for you, Brian, or just maybe a short dip? What are your thoughts?
More like a swing trade, maybe a couple days type of thing.
Yeah.
Like I said, I think we're going to find some resistance up here. It's a low risk trade because I don't remember the exact numbers. Maybe about it's like $61, maybe around 62, 63. You could probably look for your stop to be. And then that bottom box you have, that would be my target. What's that, around $50, 52?
Yeah, about 52 and a half. Yeah.
Yeah, so look to make $8, maybe risking $2 or $3 or something. Not a bad trade. But
It
it's
needs
I
a
think
pullback, doesn't it? I think
it
there's
does.
more
It
upside on it.
does.
I do, but I think now is not the time to be a buyer. I don't like the levels it's in right now. This is a great time to take profit taking. Coming towards the end of the week, let's zoom in a little bit more. And you can see we call this a doji. That weekly chart is giving us some real kind of indecision right now, that weekly candle. I mean, we've had it before here. Don't read too much into it, but particularly where we are right now, that's definitely giving us the signs, Brian, I think, on that. So
Yeah.
I would say, what about the broad market? So that's what you're bullish on. I'd love to just get your opinion on here as well. On just the broad market. I'm going to bring up the S&P 500 futures right now. I think we needed this. If we just go over to the daily chart and just take a little look and just reset the balance a little bit, taking a look at this right now. I mean, look, this uptrend has just been relentless. But definitely on here, this, to me, it just reeks of another pullback, Brian.
I agree.
I just don't see any reason. I mean, again, I think I really like this 3,800 to 3,850 area personally. That's where I see. But this, to me, is just an opportunity, I think, for just a little bit more upside on this. And that would be taking us down to around, the 3,850 to 3,800 kind of area on this. Is it time to be bearish on this, Brian, or do you just see we just need a bit of profit taking in this?
Like I said, I think it's a little bit of a correction right now, which has probably been way overdue. But I do like that zone that you have drawn right there as well. Look, we're in an uptrend, and I'm going to keep trading that way until I am proven wrong. Okay, I am not going to outsmart the market because every time I've tried to do that in the past, you get whipped.
Well, you do, don't you? And
you do.
That's the problem with it. You do. I'm going to just move you over here so we can see you a little bit on the screen as well, Brian. There you go. Put you in the middle of our screen so you can see a little bit better. But it does feel like that as well sometimes. The market wants to humble you if you're not too careful, right?
Yep.
And what is there? I mean, look, when you really screen out on this chart, and let's just take all of our drawings off and then just kind of go a little bit further out. And see, I don't know why it just kind of, let's just remove this, remove that. We don't want that on the chart. We don't want all these information on here. But yeah, if I just go over and take a look at this chart right now, there you go. There's nothing on here that really just, I mean, look at the uptrend. I mean, look at it. This is a daily chart. I mean, this is from March, or nearly a year since that. I don't see any reason for it. And even if we got some kind of a major push to the downside, I still have to be really, I feel like while this market's, trading above, the 3,500s, it's going to stay there. I just look at $4,000 now and I'm like knocking on that door of 4,000. Here we go. That's what it feels like to me anyway.
Yeah, that's definitely a level. It's a mental level.
Getting in the way of a market like that is not something that I want to personally be doing. Let's put it that way. Look,
I'm not in the business to pick a top or a bottom. I'm just trading within my system, follow my rules, and letting the charts dictate on what's going on.
Yeah.
And that's all I could do.
That's all we
If you think something's overbought or oversold, these bigger institutions could prove you wrong in a heartbeat because they're looking 3, 4, 5, 6, 7 years out. And that's what they're doing.
Yeah.
Okay. They're looking for the growth or the slowdown or whatever it is. So I'm just going to ride their coattails and let them tell me what to do.
Well, that's the thing, and that is exactly what's happening. It's just they are dictating the price, and as you can see on the right-hand side of our chart here, that price is just going one way. They're the ones controlling the market. Nobody else. No one else is controlling the market. No one else has got the control over it. They're the ones doing it. They're the ones with the big money, and I think it's just easy to follow that. I just find it gets more challenging the higher and higher it goes to get a better entry point, and that's the thing. But again, this is why as a trader as well, you got to be real careful, to not always be hitting that short sell button, banking on everything going down. A lot of people I see getting burnt right now because they're so bearish on the market, and it's like, market don't want to go down, guys. It doesn't want to go down. So
well, like I said, everybody is like, I mean, look, I've talked to many traders over the last, and from beginner to seasoned and anywhere in between, and they basically saying, I've been shorting, but I keep getting stopped out. Well, that's because the trend has been going up. You're fighting it. Look, if you're going to short, that's fine, but you got to have that within your rules, and your target's got to be a lot less than letting it go or letting it really, take one off, scaling out or something like that. Where if you're trading with the trend, you could actually do that, but you got to, understand what is going on. Look at the bigger picture.
You really do.
Okay.
It's all
and if you're going to keep fighting it, you're going to keep getting stopped out, and then pretty much you're going to have no money left.
Exactly.
Stop having an opinion.
Yeah, your opinion doesn't matter. That's the thing. I learned that the hard way. Nobody, right? I did. It's so funny. I learned about that. No, the only opinion that matters is the markets.
Yeah, of course.
That's it. There's really nothing else to worry about. Well, you took the bearish play, then that gives me the bullish play, which I very rarely get on the show. I'm always the utmost gentleman, and I give, my guests on the show the opportunity to pick it. I gotta say, if I go over back to this chart here, British pound versus New Zealand, I'm bullish on it. Now, let's look at two charts here. I'm kind of bullish on the pound overall. Let's just quickly look at the GBP versus the USD. We like to diversify on this show. But this thing has just been, there's some previous levels on here that, have just been really doing their thing. These are levels that in our live trading room, we know, this was actually this area you'll see here, Brian. I had to just adjust it for the charts, but this area here was the last time we were buying at 135.80 in our guided trade sessions that we in our live trade room. Just been buying pullbacks on this. 1.4, knocking on the door of 1.4, and there we are again. Like some of these other markets, Brian, I do feel that the British pound does need a pullback of some kind. What I'd like to do is you've got some multiple areas. We're coming into some key areas here. Like this is an area I do not want to get in the way of, but it's a wide area. You see this whole area here? You'll see it again on this weekly chart across here if we kind of zoom in and really take a look, and so everybody at home can see this. I don't want to buy it now, but I am bullish on the pound. What's interesting is I'm bullish on the pound, but I don't want to buy the pound against the US dollar. I think it's a little overbought right now. I think it needs a pullback. Again, it needs at least a pullback to around 138. But I remain bullish on it. So somebody said to me, well, if you remain bullish on the pound, okay, then you don't want to do that, what could you do? Well, I could always buy the pound against another currency. And that's why I like the pound versus the New Zealand. If we just go back over to here, let's take a look at it, double click on this chart. I've only got the data large enough to go out onto a daily chart here. But let's just take it down to at least a slightly smaller time frame. And you're seeing this beautiful trend we're in right now on this. A beautiful upward trend on this. I've been remaining very bullish on there. This has just been holding support level after support level after support level. And I got to say, look, we see where we are at the moment on here. We're just, again, around 193, 194. I got to be looking at $2 a piece on this thing. There's a little bit of a way for it to go at the moment. Let's go out to a slightly larger time frame and take a look. That's what I love about all my guests on this show. Everybody puts it out there. From where this last major sell-off happened, if I want to be a conservative man, I'm going to say 197, 198 would be the kind of area where I'm thinking this is probably going to get to. I need a little bit of a pullback to get there, but I like this more, Brian. It's overall lower. It's got that bit more upside. I think everybody's looking at pound versus US dollar. This, for me, has been always one of my current pairs. Have you ever traded this, the pound versus the New Zealand? Because it's one of my favorites. You ever traded this one, Brian?
No, I've never actually traded that, no.
It's actually one of my favorite currency pairs to trade. It's volatile. It's probably the most volatile of all the currency pairs, but it's one of the ones that moves. I like to use the forex market, the currency markets. I always like to use these purely as longer term monthly kind of plays on here. I always use them on that. I'll never use them on anything else. But again, I don't like it now. And I'd say to anybody watching the show with me right now, I don't like it now. I need what we call a pullback. And I got to say, looking at this bit of congestion that we're seeing in here, I like this around the 192 mark. Let's scroll in so you can see it. Around this 190. Area. I want to see a bit of a pullback, looking for something here, and then that move to try and ride that up. I do have students who've been long on this for quite some time. Like I say, we've been bullish for a while, but the British pound against the New Zealand, if we get more of a pullback on the British pound versus the US dollar, then I'll definitely take it, but at the moment, the near term is that. And I guess, what we can also do, which is pretty neat with the currencies, and again, it all depends on just how much data we have, but we can actually look at some of the other pound pairs against the British, Canadian. Look at it on the Canadian dollar here as well. I look at this chart, And I'm just seeing really good upside on here, really good potential. Limited data, unfortunately, that I have. But again, on this, looking at around this 1.76 area, British pound, Canadian dollar, if you like things a little bit slower. They need a pullback, anybody looking at this right now, but I do remain bullish on the pound as we stand. And it's a nice alternative investment anybody can make and say, hey, I just don't want to be in the stock market right now. Do you know what I mean? So, do you do a lot of Forex, Brian? Tell me about that. Do you do a lot of Forex or?
Very, very little. I honestly, what you were saying about earlier, when I first started trading, I quoted everything. I was drawing lines on everything. I'd have alerts on everything.
Yeah.
The only problem is the next morning, all my alerts would go off and I was like frozen. I didn't know what to do.
You never catch a break, do you? It becomes
well,
like
no.
you're
And then,
slave to the machine.
so what I did was, my trading style evolved over time. And now I look at three different things in the morning. I trade futures primarily. I look at the YM. I look at the Russell and also the NASDAQ.
Right.
Okay. I look at those three. That's it. Because now I do my analysis in the morning. Each futures contract probably takes me a couple minutes to look at. I got about 4 different screens for each one, different time frames, which helps me come up with my system. It's part of my system. Okay. Now, where do I want to buy it? I'll wait for it to come into me, and I'll do that for each one of those three.
Yeah.
And I follow rules and I wait for it, and that's it. That's all I do. So, I mean, I have longer term stuff, but that's primarily stocks and stuff. But I don't really swing trade futures as much as Forex as much as I'd like. But one thing that people need to realize too, that if you took the symbol off of that chart, you would have no idea what that is. Like
No, it doesn't really matter. We could go ahead and do that.
It doesn't matter.
Right
a chart's
now.
a chart.
Yeah, a chart. Cross all that out.
Yeah, a chart's a chart.
That's it. Cross all that out. There you go.
A chart is a chart.
Yeah.
It doesn't matter.
That's
that could be.
Thing about it. And then just using the right vehicles to do what you need to do.
100%. 100%. 100%. I agree.
It's a very, very cool thing. Very cool thing. Brian, what's the rest of the week look like for you, my friend?
Let me see here. This afternoon, I don't trade in the afternoons.
No trading in the afternoons?
No. I just realized, a long time ago that when I go into the afternoon, it doesn't work out for me.
Yeah.
It just doesn't. I have my store hours, if you want to call it that, where I know I trade, the first half of the day, then I turn it off, and then I go and do, work, for my other job, whatever that may entail or whatever. Tomorrow I'll be trading in the morning again.
Cool.
And then, I'll be working with students. I know I have I'm doing a TradeStation tutorial with somebody next week, just to help them out, figure out a couple things, whatever. So little things like that,
Keep your mind busy as well. Well, listen.
Yeah, definitely.
I'll stay safe and stay warm. Okay.
You too.
Yeah, I'm going through the same thing with the housing myself. Looking to relocate and everything. You got to calm heads prevail in all areas of life. I found as well.
You're right.
Calm heads prevail, especially in this as well. Brian, always a pleasure to have you on the show. Thank you for your insights. Stay safe, stay warm out there, guys. And I look forward to speaking to you in a couple of weeks. We'll have you back on the show, my friend. Okay.
You got it, buddy. Anytime.
Take care. Ladies and gentlemen, that was Brian Dumaresque of StockAbility, student momentum coach there, a veteran of over 20 years of involvement in the market, and love his insights whenever he's on the show, when he comes in here as well. If you're catching the tail end of the show today, my advice to you is, hey, go take a little look at this. If the tail end of the show is what you were catching on this, we were talking about gambling versus speculating, knowing the difference. Many people get highly concerned and really nervous about, guess what? Trading, investing, it's all a big gamble. It's all very dangerous. Guys, anything is dangerous if you don't know what you're doing. And I've always said that to many, many people. If you don't know what you're doing, then there's going to be a danger in anything that you do. It's all about having a plan. Treat this like a business, and it's likely to treat you back like a business as well. Giving a few shouts out on here since we've been going on here. Pedro, great to see you in here as well. Linda De Valerio, great to have you on the show too, Linda. And Anne, great to have you back on the show. I haven't seen you for a few weeks. Hope the family and everybody's doing well in the UK, and hopefully a little bit warmer than we are on the East Coast, or should I say pretty much everywhere across the US. If you guys are interested in finding out more about what trading like a business is like, how do these markets really work, then let's go over to our website on here right now, StockAbility.com. Go to StockAbility.com. This is your best resource here, StockAbility.com. And on our homepage, scroll right down to the absolute bottom of the page here. And there's a couple of things you can do. You can scroll down to the bottom if you know this. And then if you get past this, we've got all of our complimentary webinars on here. We've got actually one coming up next week with myself. I will be hosting a webinar next week doing this on here. It's going to be called The Trading Business Blueprint, how to start the first steps of treating your business, your trading and investing like a business. March 10th, a couple of weeks, understanding how the markets really work, and then we will be repeating the Trading Business Blueprint on March 16th if you can't make that as well. We tried to put different times in here for everybody, so we've got 7 p.m. Eastern here, 7 p.m. Eastern. This is going to be 11 a.m. Eastern, giving anybody who's on different worldwide time zones an opportunity. You can go ahead and register right now for those. They are complimentary. We'll show you a little bit about what we do, show you some really cool things, a different perspective on the market. Maybe we can help you out as well. We'd really like to see you there as well. In the meantime, plenty of other resources on the website for things that you can check out, articles from our lead coaches, and also plenty of other on-demand content that you can start to see as well. Keep an idea looking at our YouTube channel as well. Make sure you keep registering and going over to the StockAbility YouTube channel, and the Twitter. If you follow us on Twitter, Instagram, StockAbility, you will find that we are still putting out great new content every day from Dan Bastamanti, Ryan Watkins, and myself and the coach team as well. So, whole lot of fun that we've had on this. Guys, I had an absolute blast. I want to thank you all for tuning in and taking some time out of your incredibly busy days. And I know we're stuck at home, but we're still incredibly busy. Man, it's amazing just how much stuff you can get done even though you're locked in the house doing stuff as well. Absolute pleasure to have you on the show. Your comments, your shout outs, feel free to post anything on here as well. Pedro, thank you so much. Great to have you again on the show. I hope you enjoy. I'm glad to see you enjoyed it as much as we did. And we will be back next week, same time next week at noon Eastern next Thursday here on Facebook Live. Go ahead, subscribe to the site, make sure you get the alerts and that. And if you did miss this, remember you can always watch the recording on Facebook Live. We also upload it onto our YouTube channel where all of our previous shows are there as well. It's nice to have a show go through without any technical issues. Never say never. My name is Sam Evans. This has been Take Stock Live, powered to you by StockAbility.com. Stay safe, trade well, be happy. See you next week. Thank you.